All right, awesome. We are live. It is Fridays in Fintech, and we have Dan Chemnitz on here, who super glad to have you on here, Dan.
Hey, nice to be here. Thanks, Jake.
And a brief overview about Dan. Super impressive career. Started his career actually at the National Bank and Trust Company, and then went to the Vanguard Group, and really got into IT and security at FIS, where he spent 10 years there. He helped scale that organization. Everyone knows FIS, but he helped them scale from 3,000 people all the way to 40,000, manage a lot of their IT, their audit, their security practices, and got to see a lot of that transformation. And then from there, he did a brief stint at 360 Advanced, and then went to Nymbus, where he got promoted to the chief risk officer, saw him go through hyper growth, led that from a smaller fintech to now what it is today. And now from there, he went and started his own practice and is a associate practice director at 360 Advanced. Dan, great to have you.
Thanks, Jake. Appreciate it.
Yeah. And so, Dan, I always ask the hard-hitting questions and, very serious starting out. Do you prefer pineapple on your pizza?
No, that's sacrilegious. That's sacrilegious.
Where are you from?
I came from Philadelphia. I mean, we're better known for cheesesteaks, but pizza is one of our things. And if you put pineapple on a pizza in Philadelphia, I'm pretty sure they'd throw you out.
Oh man, yeah.
They do worse things too. It's Philadelphia, but yeah.
I say Philadelphia doesn't play like some of the stuff I heard, especially in sports. Like you don't mess around.
No, that's the city of brotherly love thing. It's nice in theory, but it's not always actual practice.
That's funny.
Well,
good to know. Have you ever tried it though?
I think I have, and it was really not. The whole sweet and salty thing is really not for me.
That's funny.
Yeah. Like chocolate covered pretzels, that's not for me.
Oh God, I love chocolate covered pretzels. So I don't eat them really, but I like it. It's weird. Well, Dan, I'm curious. I saw you went from an accountant to an analyst at Vanguard, and then went to FIS. What really led that journey to kind of focusing on IT, security, auditing? What was like? I guess someone doesn't wake up and be like, oh yeah, that seems like really exciting. Curious to hear your journey.
Yeah, no, it's funny. When I was actually still in college, I didn't have the traditional college experience. I worked full time and went to school at night. Took me 6.5 years to get my degree. But that was kind of the path I took. Fortunately, at the end of it, I didn't have any student loans. I had my company paid for it. But basically, I had gone to school for finance. I was working at Vanguard at the time. Thought that I was going to go into, being a stockbroker or something like that. Had enough of the Pennsylvania winters and decided to move to Florida and shifted gears a little bit. And I started working for a company called Certegy, which was the going from 3,000 to 40,000 was, it's a little bit misleading because it was actually via acquisition. So I worked for a company called Certegy for about a year before they got acquired by FIS. It's kind of a running joke at FIS that if they can't beat you, they'll buy you. So they do a lot of acquisitions, and I went into FIS via an acquisition through a company called Certegy. They did check processing, credit card processing, and everything here in St. Petersburg. But I was in their internal audit group. Thought about, at one point when I was, getting my finance degree, thought about, doing the CPA thing, and decided that really wasn't the path that I wanted to take, and, got a job, and started out as a, internal auditor doing IT audit, and seeing that there was a lot more opportunities on the IT audit side than maybe on the finance audit side, and sitting there looking at spreadsheets all day was really not, I mean, IT audit is not exactly like, it's not super exhilarating, but looking at spreadsheets is even more dull. So I thought, this might be the better path. So that's kind of what took me down that path. And then, kind of like you said earlier, I spent 10 years at FIS, worked my way through, PCI, SOC 2, vendor management, you name it. And like, it was I went from a department of about 10 to, by the time I left, there was about 250 people in my department. I mean, the company was just gigantic. They were all over the place. They're all over the globe, but the team that I managed was out of Milwaukee, so it was a lot of trips back, a lot of trips back and forth a lot of trips back and forth to cold Milwaukee. So it was not really my thing. So
that's funny.
But
I'm curious. You got that company got acquired. You're at FIS, and one thing that companies, like smaller companies as well as larger companies, right? You're trying to oversee vendors. You're trying to integrate them. What were some of the challenges that you faced at getting acquired, and then dealing with so many people, such a large organization, all these moving parts? What was a lot of your focus?
Yeah, I mean, just dealing with like the vendor management piece is always a challenge. I mean, even at a company the size of FIS, it's really daunting. But going even into like a startup company, like when I was at Nymbus, where it's, there was really, when I started there, I think I was employee number 20 or something like that. But everybody's got the way that they do, business, and trying to centralize just the way that you manage vendors. So trying to figure out who your vendors are, going through accounts payable, at least trying to set up a centralized process for, who's signing contracts. Because when a company the size of FIS, when there's, 40,000 people, and you've got business units that are signing their own contracts, and, there's really who has access to our data, what are they doing for us? It can be challenging. So trying to centralize things, getting your hooks into accounts payable, into legal, so who's reviewing the contracts, who's signing these things, how are they getting paid, and then from there, that's one of the things. Risk management really needs to kind of be in lockstep with accounting as well as legal, so that we know, again, like I said, who we're paying, when they're oh, sorry, my brain just flaked. And then basically when, we have to onboard vendors, vetting them, making sure like who, what they're going to be doing for us, all that kind of stuff. You have to centralize it, and it's really kind of problematic if you've got, 40,000 business units that are, kind of doing their own thing.
That seems like such a challenge, right? And some of the stuff, even trying with these huge banks, right? And they're like, you have so many stakeholders within the decision process. How do you even start to manage that? How do you centralize that? What are like, how do large organizations think about that? And then if you're trying to sell them, how do you deal with that?
Yeah, I mean, honestly, doing it internally, it's really just, it's that kind of corny adage that people say. It's like, how do you eat an elephant? Like one bite at a time. It's really like you just got to pick one thing and kind of start with it, and pick the most critical business units that that will have access to consumer data. Kind of start from there. Like again, like I said, you got to start with. A lot of times, the companies don't know who their vendors are, which sounds kind of goofy, but it's absolutely the truth. So your only way to really start is go to accounts payable, get a feed from accounts payable, and say, hey, these are the 100 vendors that we do business with. How are we, vetting them? How are we classifying them? And then from there, basically, classifying them based on the predefined criteria. And again, a lot of that stuff is guided by the FFIEC's guidance. When it comes to fintechs, they have a handbook for outsourced technology services that basically guides how companies are supposed to manage vendors. And then from there, it also gets down into basically fourth stream, which is, fourth party vendors. So your vendors, and then, how they're managing data, which can be somewhat problematic, because most of the time, if you have a contractual relationship between, you and I can come and ask you for things. If I go to somebody that you do business with, but I don't have a relationship with them, but you do, like, you're processing, say you're doing statement print or something like that, but you're doing it on my behalf. How do I go and I have, make sure that company is now protecting the data the way that I need them to? So fourth party vendor management is really becoming, pretty prevalent in, financial services.
Well, so yeah, I talked a little bit about fourth party management on our last episode. It's, what are you seeing in that space? I'm just curious. Like, and then you get to, well, are we gonna go to fifth level, or like, How does this data connect?
Yeah, I don't know where they're going to stop it. It's already challenging at the fourth level because, again, if you don't have a contractual relationship with the vendor, going to somebody that's fourth party to you is kind of problematic because they can basically say you're not my customer. I don't have to give you anything. Now, the FFIEC has kind of put out guidance for it where it says, yes, you do still have some sort of obligation to people that you're processing on behalf of a third party. So it's really, I mean, I would hope that they're going to stop at fourth party, that they're not going to take it, another layer down because that's just going to make things even more complicated. But fourth party vendor management is really kind of a hot topic. And it has been for about the last year in the risk management space.
That's super fascinating. It's kind of like there's better tools, there's better data, there's obviously AI tools that are popping up that can just grab all this data. So there's a lot of new capabilities happening, but where risk is going to be happy, regulators are going to be happy. It's kind of, I feel like the goalpost is being pushed a lot more.
It is, yeah, and that's honestly as it's kind of crazy to think about, just how far technology has come. Like 15 years ago when I was working at FIS, sitting there working with the regulators, anytime somebody said cloud, that was, that would make the hair on the back of the regulator's neck stand up, like, because that was like a foreign concept. And it was like, oh, if it's not within your four walls, what do you do with it? Now it's table stakes. Like, that's just, if you're not in AWS or Azure, it's kind of like, are you living under a rock or something? That's just the way that, the world has evolved. So, things like AI and things are just going to continue to evolve the marketplace, and you either, adjust or, you're going to have some major risk management problems if you don't adjust.
Yeah, that's fascinating, right? It's like, oh, there's this new technology that makes things way more effective, way more efficient, and regulators like, whoa, slow down. Let's really which is good. You need to have skepticism to it, but you also need to embrace it in the right way, and kind of there'll be new frameworks for it. We're looking into this as well. Where how do you create new frameworks for AI safety implemented in institutions? That's going to be a whole other thing.
Yeah, and that's one thing I've seen a lot. I mean, I don't really deal a lot, these days with, financial services, but, with the small institutions that I do deal with, AI involved in coding, that's like a huge deal. Like, how are you making sure that, vulnerabilities aren't being injected into that code if you're just, talking to your computer and having it spit out your code? I mean, it's going to have its challenges for sure. So making sure that you're developing secure practices for coding with the use of AI and, across your organization is really going to be kind of, fundamental for sure.
Yeah, for sure. It's going to be a whole other level of risk management that will continue to evolve. But you kind of, FIS, amazing organization. They're huge. You kind of took this leap from there to, you're at 360, but then went to Nymbus. What was that journey like, and what drew you to joining Nymbus?
Well, yeah, I mean, it's nice when you go from a huge, well-established company like FIS. I mean, it's, well known. Everybody in, the financial services space knows who they are, and, every bank or credit union across the country and, a lot of international institutions are using some sort of FIS product in some form or fashion. But everything's well established. Again, it's, something that's, you basically just fall in line and you're part of the machine. But when you go to a company like Nymbus, a startup, obviously it's, hey, you have a little bit more free reign to build things the way that either you want them to be or that they need to be, and really kind of getting into the ground floor and building things from the bottom up, so to speak, is it's nice and it's attractive, but it certainly has its challenges because, I mean, obviously when you're dealing with startups, you got limited budgets and things like that. And I went from, like I said, I was in the department of 250 when I was at FIS, and then for a while when I first started at Nymbus, I was a department of one. So I was the only person doing risk and compliance at Nymbus for a while, and then as sales take off, obviously things start to pick up, and by the time I left, I think there was about 10 or 12 of us total.
Wow. What were some of the challenges or any interesting stories from the early days you had to deal with?
Well, I mean, I don't want to give away the secret sauce, but Nymbus is, their background is not necessarily in finance. They have a partner company that the founder had spun things up. So there was the company, while Nymbus was new, the people and processes and the technology weren't, because they had been around for, I don't know, 20 years or so, but they were in the media space. So they basically took the same platform that they had and they retooled it and basically built out a cloud-based core banking platform. Obviously, things have shifted quite a bit, when they got into digital banking and things like that. But even though it was kind of a startup, you still had that challenge of, well, this is the way we've been doing things for 20 years. And it's like, well, that doesn't matter anymore, because you are now in a very heavily regulated industry. You're dealing with, you're not dealing with, advertisements and things like that when you are in like the publishing world. You're dealing with consumer information. And if you're not handling that data properly, you're going to either end up on the news or you're going to be subject to a major lawsuit. So like I said, it's nice that you get to build things out the way that you want them to be, or that they need to be, but making sure, kind of shifting gears and kind of turning that the what do they call that? You're turning the it's like shifting a what do you call it? Like aircraft carrier. Like you're trying to shift this. It's like
it's not going.
It's like
that's funny.
The people are reluctant to do it because they don't. Again, it's not the way that they've done things for the last 20 years, and they're reluctant to change. But it's like, okay, well, you don't really have a choice anymore. Here's the guidance that says you have to do it that way. So it was a challenge in that regard, but it was fun. I mean, it's a good company, a lot of good people. I have a great opportunity, a great experience there. So.
Yeah, that's super fascinating, and just going from, it's kind of interesting here. Like, it was a startup, but still had a lot of its traditional roots. Kind of like, hey, we've been doing this for like this, and let's try it in a new industry. I mean, it seems to be working pretty well too.
Yeah, and it's like I said. I mean, it is fascinating because a lot of the people that, I mean, obviously there's been a major regime change there. But a lot of the kind of core values and the people that kind of got things started, some of them are still there. But the way that they got started, again, it's a story that people don't really know about, that it was it got its roots in something other than financial services. So they spent when I started in December of 2015, I was told, hey, we're going to be going live with our first client within by the end of next quarter. Well, typical startup, there's delays in the product and you got to do this, you got to do that. We didn't go live with our first bank until I think it was February of 2017. So for basically better part of a year and a half, we were trying to get things in order, make sure that the product was right. Again, then you're at that point, you don't have any clients. You got to go out there and try to, who's going to be the first guinea pig that wants to take the chance on a brand new client or on a brand new vendor, or do I just want to sign the deal with one of the legacy providers that they've been around for 40, 50 years, selling yesterday's technology at tomorrow's prices. So it's it's a lot of that stuff is because going through a core conversion, it's like a heart transplant. Nobody wants to do it, so they will sign increased deals for outdated technology just to avoid it. It's kind of crazy, but things are starting to change. There's a lot of I think it's going to be, I don't think it's going to be one big kill shot for the major players. I think it's going to be that death of a thousand cuts. There's a lot of smaller, companies that are, coming up with, cool, innovative technology that is, ultimately going to, kind of shift and make the market evolve.
Yeah, it's kind of funny talking about banking cores, right? It's just such an outdated industry, and no one's really happy, but it's like, oh yeah, let me pay for this huge contract that's going to lock me in with really old technology. I'm curious, are you seeing any interesting trends happening in that space?
like I said, I've been kind of out of, financial services for about a year and a half now. Some of my clients now at 360 are involved in, financial elements. They're mostly small and mid-sized businesses.
Mm.
But, when I was there, I mean, obviously the market has been challenging for the last, call it 2 years. Then there was the run on the banks with like the Silicon Valley banks and things like that. That made things, more challenging for the market. It's been a rough go. I think a lot of the startup companies, that was the thing when I was still at Nymbus. I think, there was almost weekly, monthly deals that you were seeing, like, was it Finxact got acquired by, Fiserv, and then I think it was SoFi bought Technisys, and there was like these huge deals. And then you saw this shift in the market where they were not really, those kind of deals weren't really happening. And then there was the run on the banks not that long after. So it's kind of crazy the way that the market has, responded to various, whether it's, political or, economic conditions or whatever the case might be. But there's always been, anytime that there's some sort of hiccup, there's always downstream effects. And it's been challenging for financial services for the last 2 years, at least, for sure.
Yeah, yeah. The market conditions are definitely not easy right now. Again, it went from, I'd say, high innovation to now it's like really high, like, whoa, risk averse. Where's the safety? And then regulators kind of they're really showcasing that.
Yeah, I mean, the nice thing is, like, I have seen at least, and this is not just something from financial services. This is just, general. Like, I still do hear from, recruiters and stuff. And while the market, the job market was pretty soft for a while, there was a lot of people that were looking for work. The recruiters that I've spoken to recently, they said there's been a major uptick in opportunity. So, there's going to be things. Yeah. That's what. So, I mean, I think there was a lot of market correction post COVID where, companies were, Amazon and, all the big tech companies that were, hiring people left and right during COVID. And then they had the market correct afterwards. I think we definitely saw a lot of that. So I think things have stabilized, and now I think you're starting to see the recovery a little bit. And like I said, I mean, at least talking to the recruiters that I hear from, they've said that they're starting to see that rebound. And there's where there was, a couple of the recruiters I talked to are like, oh yeah, I routinely carry like 100, or so postings. That was down to like just a handful. And then now they said that they're getting back up to the numbers that they were historically at. So I think recovery is coming. So hopefully we'll start to see that, trickle down to the financial services market as well.
Yeah, it's super fascinating. I think I see that in the market as well, and it's really we're back at an uptick. I don't know on the long macro scale, but I definitely feel an uptick in the market, which is great.
Yeah.
And yeah, so talking about Nymbus, right, that first contract, and also you went and started your own practice, helping maybe smaller, mid-sized companies. What are some of the things that you have to think about as a newer company when you're trying to make it through the vendor diligence process, right? There's the typical SOC 2 and stuff, but how do these newer companies, fintech, startups who are selling to larger institutions, how do they triage the problems? How do they focus on the right things? And what are they?
Yeah, I mean, it's as far as vendor management, just making sure that those companies. I mean, obviously, it's going to be a matter of classifying the people that you have to have that predefined, bucket of, what are these companies that we're doing business with? How are we going to define them? What are they going to be doing for us? How much money are we spending? Because that's something maybe they don't have access to data, but we spend $1 million a year with this institution, so. Obviously, if there's some sort of business interruption on their side, it's going to have some, downstream effects on my operation. So you got to consider those types of things. But there's a lot of, like I said, you got to have that policy and oversight function stood up first. So, like, hey, this is who we are, this is what we do, and this is how we do it. And then basically classifying those vendors. Again, then it's going to be going to, the other business units that you're going to be working with. great to start with accounts payable, so you know who those vendors are that you're going to be working with, making sure that there are, adequate, contractual provisions in place. So reviewing the contracts and doing all that stuff. And then one other thing, once you kind of go through the security due diligence and making sure that, at least from a risk perspective, that, they're good. The FFIEC does require you to do a level of, financial health viability screening on vendors. So using a tool like Dun & Bradstreet or something like that, just to make sure that, hey, is this vendor in good standing? Are they doing the things that they need to do to, pay their bills? Are there any liens and judgments against them? And then, obviously there's other things that are in there, commercial credit score, things like that, just making sure that they're in good standing. And if there was you can do like reputational things too, because that's, another thing. Obviously, you can't turn on the news anymore without hearing about some big company that had some sort of security breach. And, is from a risk perspective, is that something that you want to have your brand associated with somebody that was just all over CNN for having a major security breach? So,
yeah. And how do you rate that, right? Say you're working with a vendor or a newer company and they're slightly associated with this other company, and it's like, how do you even put a risk score to that? Like, is it very subjective, or do people have these own internal scores they build?
Yeah, you do. There's several ways that you can do it. Again, you can do things kind of old school, especially if you're at a startup and you don't have, funding is an issue. You can do things somewhat manually, where you have like a security questionnaire that you would send to these vendors. You kind of do things on that regard, but then there's 1,000,001 GRC platforms that are out there where you can kind of automate your vendor program, and you can plug in some of the criteria that will, it'll help you automate your process. And it will, if you say, hey, these are the thresholds that I want them to be at, and then it'll come back and it'll spit out your score, and it'll say, hey, this vendor is at a high risk because of these factors. And then it's on you to go back to that vendor and make sure that they either tidy things up, or then you go back to the business unit if they're either unable or unwilling to make the changes that are necessary for you to secure your business. If they can't do those things, then you need to go back to your line of business and say, hey, it's probably time that we come up with some sort of backup plan, or, maybe time when this contract's up, maybe we start looking for, an alternate vendor or something like that.
Yeah. It's super fascinating, right? Then it's like, okay, we have our, vendor onboarding, vendor screening, but there's a big issue, right? I'm sure people are paying attention to Synapse and Evolve and some of that sort of stuff. It's like, what about offboarding? How do you successfully offboard? What are the plans in place there? And that's probably a whole other can of worms.
Yeah, it really is, because a lot of that's gonna come down to, again, it depends. Obviously, somebody that I'm sending files to produce credit cards for me, or statements or something like that, that's going to have end consumer data, and then there's going to be privacy implications and things like that. Obviously, that's going to be different than, hey, we changed from coffee vendor A to coffee vendor B. When you have to deal with, how do we get our data back? How do we make sure that you're purging that data, and that, hey, we are effectively, out of your system, and, successfully transferred over to whatever replacement vendors. Yeah, offboarding vendors can be a little bit challenging for sure.
Yeah. Dan, I could go on, but we are at end of time, and what we like to do here at Fridays in Fintech is we love closed loop systems. What that means, we don't do KYC, we don't do AML with our gifts, and so we're giving you a gift card from a random, we'll go with a Southeastern restaurant, chain restaurant, and the one that we have that may actually work for you is, I'm looking in my Rolodex, and it is going to be the Benihana. That's Benihana. They have those in Florida, right?
Oh yeah, that's for sure. I got I'd say two little kids, but they're not really too little anymore. I got a soon to be 15-year-old and an 11-year-old that they love hibachi, so that'll work out great.
I was like, I wrote it down. I was like, wait, but it was a hibachi, but no, it's Benihana.
Yeah,
awesome. Yep. Well, Dan, really great having you on here, and
I appreciate it. Thanks for having me.
Chatting soon, and have a great weekend.
All right, you as well.